But as promised, let's also get to a conversation on the metal space with a specific spotlight on Tata Steel. Of course, the company and the stock is in focus after it announced a major expansion, a lot of Capex programs. To talk about this, the outlook ahead for Tata Steel and for, of course, the metal space overall, Parthiv Jhonsa, Vice President at Anand Rathi Institutional Equities, is with us. Parthiv, thanks so much for joining in. So it's a large expansion that Tata Steel announced yesterday, right? They're looking at doing it organically. And then the tie-up with Lloyd, where they're looking at expansion in Maharashtra. What did you make of the announcements and the kind of capex that will be required?
Hi, good morning. Thank you for having me. So let me just start that, yes, this is a growth capex, which basically Tata has come out. And just not just for the Tata, even for Lloyd's equally is as important as that's for Tata. And now the entire capex or the entire growth journey, what they have laid out, day before yesterday, is basically taking care of, taking NINL from 1 to 4.5 million ton at Meramandali, and thereafter, they have even tied up with Lloyd's, wherein they are so main focus of that JV is to basically, take that slurry pipeline which is going through Babel, which is basically connecting their mines to the Kalinganagar kind of a facility, kind of a pipeline, and which has a further potential to take it to a port-based kind of a pipeline as well. Another aspect is basically they have developed this one low carbon technology at Netherlands, which they are trying to get it in Jamshedpur and trying to put up a 1 million ton kind of a pilot project, which is at a much lower capex than a regular greenfield project, which usually requires, just to give you a ballpark, it requires almost about 7 to 9,000 crores per million ton. This will be done at a 2.5 to 3,000 crores kind of a capex. So it's practically about 1/3 the capex. So that's also very positive, where you can feed slag, you can feed low quality ore, which also has a lower emission compared to your blast furnaces, which also helps you to adhere to your European standard or CBAM norms to an extent, right? So all these things, all these things basically gives them a growth journey going forward. We have always been talking that, okay, Tata Steel has given out a growth journey, which will basically double down their domestic capacity, but there was a lot of unknown variables that how will they take it post 28-29. But now a lot of clarity has been given out by the management. So a big cheer for the management that they have laid out, not only taking their flagship or legacy facilities, but even taking care of the new facilities. Now the beauty is, because these facilities are new, they already have engineering in place, so the time taken to set up a blast furnace at NINL would be much shorter, would be much faster than what they have done at the other facilities, right? So you are saving on your time, you are expanding faster, you are taking that opportunity of India being a growth, being the fastest growing in ferrous space. So that's basically for Tata.
Hi, this is Rima here. Could you give some numbers? What, according to you, would be the total capex that you're factoring in, and how will it be funded?
So let me just put this across. What is the total capex? So as I told you, the Jamshedpur is expected to be close to about 2.5 to 3,000 odd crores, which the management has already given out the number. The other number, which is basically the NINL, which is the largest chunk of the entire thing, the management has already clearly stated that they will get back in the next couple of months. They also are doing some preliminary work at their end. But if you want to just put it across, usually a greenfield requires almost about, say, 8,000 odd crores. So just multiply that by 4.5. So you'll get about 35 or 1,000 crores kind of a capex. I think, but it is expected to be a bit lower than that, because you already have engineering work in place. You already have a facility. You already have a major land bank in place at NINL. You already have mines in place. So your overall capex should be much lower than that.
How much lower? So what are the numbers that you're working with? I understand the management will get back with the official figure, perhaps, by March or in the next couple of months. But how much lower than 35,000 crore?
I'll not give out a very specific number out, but let me just put it across. It will be substantially low. Let me just put it across that way.
Got that. And how will
I want to avoid giving it, because the management clearly have indicated that the numbers, even they are doing their own. They have gone to their own drawing board and they are doing their own calculation for it.
Got that. Will funding be a concern? How will it be funded, to your mind? What did the management say about that? What could be the peak debt for the company, since Europe refurbishment is also on?
See, I think your domestic is at a very good space compared to your European subsidiaries for Tata. You already doing a good, 15,000 kind of an EBITDA, and that would keep on continuing going forward till at least till 2030, till the time they have their own mines. What I believe is Capex, the debt would not be a problem for Tata at the end of the day. They would be able to, furnish that debt, and they'll be keeping it below the threshold, whatever they have quoted in the past.
Okay. And the other, talking point in the markets is that what if the safeguard duty doesn't come? What will be the impact on steel prices?
So I was just on a call with a couple of my my channel checks or my vendor networks today morning itself. So some backward calculation we did, just to give a perspective, China, CFR is almost what, say, $500 odd. When you add close to all the duties and your port handling charges, net it works out to, as on date, without the safeguard, it works out almost about 10% higher than your domestic HRC, right? If safeguard does not come, this is the gap. You are at almost about 10% discount to the global prices. Now, Bao has already taken a 14% hike yesterday. $14 hike yesterday, which is basically expected to come in India in January. What I spoke with a couple of vendors, there is some very minor price hike because of the supply demand dynamics, almost about 500 rupees in major markets like Bombay and Central India. So there is a 500 rupees price hike, which is currently there in the market. You can expect another 1,000-1,500 hike in coming weeks by the time you reach first or second week of January. So overall, so if you consider month on month, it will almost be about 1,500 to 2,000 rupees of a hike, which is expected.
Got that. And just looking ahead to 2026, I think this year belonged to copper. But
Yes.
next year, between copper, aluminium, which base metal are you more bullish on?
Let me just give you some background across not just copper, aluminium, just across the top five. Copper, yes, I'm bullish today, and I think for the next 2 to 3 years, because of the global copper crunch, number one. And number two, no major mines are coming up. If you see, I had recently initiated on Hindustan Copper also, where I clearly mentioned this, that the global capex towards copper right now is basically going up, and it's been 4 or 5-fold over last about a decade or so. There are no new major, resource which has come up in last 2 years, right? So the global copper crunch is going to remain. I think the LME at $11,700 might remain around this level. And what we are building is around 11,000 kind of a level on a LME over next 1 to 2 years. So copper is going to be the favorite out of all the five, even for next year, followed by aluminium. Aluminium being the second biggest commodity after steel. There's a lot of demand coming from all these sectors, whether it be legacy sectors like infra, construction, to the new age sectors of, say, renewables or EVs and so on and so forth, right? So copper, thereafter aluminium, thereafter you have, zinc, right? Zinc is, again, though the prices are, as I always tell, prices are globally global driven, but the demand is very Indian centric. It's because it's at the end of the day, it's related to steel cycle, right? Thereafter, you have nickel and then lead.
Okay, thank you very much. A great conversation. So many insights you've shared with us. Let's